Well, I think this year is really interesting, especially from a China perspective. We have internationalisation of the China market. So what we've heard it talked about for the last few years is really coming to fruition this year. We're seeing things like developments in the QFII quota, the merger of the QFII schemes. Another really interesting trend we're seeing is the index inclusion, so the MSCI inclusion last year and the reweighting this year. Both of those are leading to a lot of foreign investment coming into China. And I think another market which is really interesting this year is Japan as well. So they're doing a consultation to change the structure of their trading boards, and they're also going to allow margin trading on their non-exchange venues, which I think both of those things together is going to change the market structure and the market share within that region. I think what's happening in Asia, especially in China, is really interesting for US and European investors. If you're a passive investor, for example, these changes to the global indices are something that you're going to be tracking. And if you're an active investor, you're going to be looking at what's happening with those index inclusions, and perhaps even if you didn't participate last year, I think this year with the reweighting, there's going to be more incentive for you to participate this year. I think the new board is a really exciting development for China. I mean, it's providing an opportunity to list for pre-profit companies, for companies with dual-class shares, for example, which would have previously gone to maybe NASDAQ or Hong Kong. So it's really allowing those companies to list in China, and we're talking potentially hundreds of companies that could be coming to the market through this process. They're also going to be able to list in a more straightforward and streamlined fashion, and once they do list and start to trade, there's going to be fewer restrictions around the trading, especially things like the price when they do first trade. I think previously investors may have been a little bit worried about trading in China because they're not familiar with the access routes, but having now had the QFII and RQFII schemes, which look like they're going to be merging, which will be simpler for investors to access and simpler for investors to use. And we've got the Stock Connect scheme, which has been around for 4 years now, has a really good, strong, stable track record. I think with those two schemes, you've got two very good and stable options for investing in China that should give some surety to your investment and your ability to also repatriate your funds outside of China.